Hello and welcome to Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is the show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then. Jaykumar Toshniwal, Investment Advisor Sharmila Joshi, and Vineeta Sharma of Narnolia Financial Advisors join us on the show. Thank you to all for joining me on the show. Today on Hot Money, we'll discuss stocks like Reliance. Reliance has a market cap of in excess of 8 lakh crores. What should one do with Reliance at this point of time? FMCG has a package doing well. Most of the companies, be it a Britannia or a Dabur or a Marico, are trading close to record highs. Is this the time to get in? MGL, a big correction post British Gas selling stake for the second time. They still have one more block, but that will happen only next year. And we asked them for a top mid-cap investment book in a market in which mid-caps have again now started to contribute. But we'll start with the first stock, and that is Reliance. Very widely covered stock, but market cap in excess of 8 lakh crores. The first company in India to hit a market cap of 8 lakh crores. Trading at record highs, the rally seems to be continuing. Is this enough, or is there more potential for someone in Reliance? We'll ask our guest. So Shalila, I'll start with you. 8 lakh crore market cap, trading at record highs, everything going in its way. Is this enough, or should someone even put in more money on Reliance at this level?
I think very honestly for me, what I think has changed for Reliance is the fact that, at one time...
Okay, I think there is some issue with your mic. I'll just get that sorted. But Vineeta, I'll start with you. Your view on Reliance.
See, Reliance has been, the sales has been stagnant for quite some time. For, in 2014, the top line was 4.3 lakh crore. And in FY19, we're expecting the top line to grow and surpass that limit. The EBITDA margin had fallen from 2014, from around 15%, it had fallen to around 7%, and we are expecting this EBITDA margin. Now the EBITDA margin has grown, it is above 9%. So we are seeing a marginal margin improvement in the company. Also, if you look at the capex, so most of the capex is over. See, FTH home to fiber to home is still pending. So by and large, the capex is complete. So we are expecting all the verticals are doing good. So we are expecting all these to benefit Reliance going forward.
Okay, so we'll come back to you on Reliance, but Jay, your view on Reliance?
See, primarily if you see Reliance, it has a policy of where growth is way of life. So it does everything big. They want to be global scale in everything they do. And they invest large amount of money. So they set up the largest refinery, the largest petrochem plant. They have almost the largest retail store now, and they have the largest telecom network. And they try to be large in E&P, but in the oil and gas E&P, but they couldn't succeed there. So I find that you have Reliance with all cylinders firing now. So Jio had a large capex of 250,000 crore plus, and with the mobile thing already rolled in, and now they're getting into the homes through the fiber network. At the same time, you have Reliance Retail, which is also growing fast, reaching a top line of almost 13,000 crores for a half year after removing the oil and Jio sales, so which is quite large. So I feel that investments in petrochem, refining, as well as change of feedstocks will all add to the profitability of Reliance, and it has all cylinders firing, so I expect Reliance to keep moving forward.
Okay, so we'll discuss that in detail going ahead. Sharmila, your mic is live again. Your view on Reliance.
Just to add to what everyone has been saying, you have a capex which is done, and in spite of that, you are not really seeing the stock price really move higher. Because I think, when it comes to a company like Reliance, the main concern that is always there in, like if you're a shareholder or if you're looking to buy fresh is that yes, they're generating so much of free cash flow, but where does that go? What is the next business? And they have invested in retail, or they had a couple of years back. Then you had this whole telecom piece, and you said that when is that going to start generating significant numbers? Now, I think, if you hear the management talk, and I think that's what's really changed for the stock, and that's why I like the stock at this stage, is that if you heard in the last the AGM, the way the management spoke about both the retail business and the telecom business, and the way they really talked it up, I think they've got big things planned. So I think, that's the reason why this stock will do well, because you have the new businesses which are going to contribute nicely going forward, while the base business we've seen, whether it is both refining, petchem, that's doing well in any case.
Okay, so all three of our guests are rather bullish on Reliance. We'll discuss it in detail. Vineeta, do you all have official coverage on Reliance?
Yeah, we do.
So what's the target and what are the key triggers that you're recommending to clients? What will be the big trigger for Reliance going ahead?
So Reliance, we have a target of 1424 and we are valuing at 2.4 times FY20 price to book. if we look at the key triggers, one is Jio, obviously, where the subscriber base is around 210 million right now, and the company is expecting the subscriber base to go double in the next 2 years. And if we expect that some 10 million will be added every month. So the volume growth will be there. ARPU, I'm not very sure how, because I'm expecting it to little bit soften from here, but the volume growth will be large enough to take care of the Jio growth going forward. Regarding petrochem business, already the RGCO, which is already planned, and its volumes are around 25% plus year on year we are expecting for the next 3 quarters. So petrochem, again, volume growth, and the on the refining, even with crude prices going up, you have seen a good double-digit GRM for Reliance. So refining that way. Then comes the retail. For retail, there are already 4,000 retail stores for Reliance Retail, and the management is also expecting, some 50% PAT growth going forward. And as per my analysis, still we are undervaluing the retail space, which is there with Reliance, because most of the reports that I read is only valuing the Reliance Retail at one-time sales. And which is a little lower than what are available in the market. So overall, the whole growth, if you see, there are all businesses which are spreeing growth, and that's the reason we have a buy on this company.
Okay, buy rating on it with the target price in excess of 1400. Jay, what are you betting on in Reliance? Because now each and every business, initially it was only the oil and gas business, now it has 3 or 4 businesses, and all of them have become sizable in this thing. What are you betting on? Which business probably will be the growth driver for Reliance now?
I think if you look at from this point of view, petrochem and mobile business, Jio, will be the growth drivers. Retail will also add something. On Jio, I agree with the broad contours of what Vineeta said, but I have some different ideas on that.
Okay.
She talks of subscriber growth going from 20 crores to 40 crores, which will be a little tall order to achieve in next 2 years. But I believe that the whole segment is consolidating. The business is consolidating. We will have 3 main players. So I expect that the ARPUs should start rising from FY20 onwards. So maybe after 2 or 3 quarters, we will find that ARPUs would start rising. And the integration of media into all this mobile business and direct to home, I think I expect value addition to come from Jio. Okay. Though the profits what they are showing is not correct because of the depreciation policy, but still I feel that operating leverages will play out, and FY19, FY20 onwards, Jio will be a sizable business, a profitable business. At the same time, retail is growing at the same, and you have Alibaba having some talks with Reliance of taking a stake in this. So if that also happens, it gives a good valuation to Reliance Retail. So that would add to the retail flavor in Reliance. On petrochem side, sizable investments done are now coming to fruition. Already the largest off-gas cracker in the world has been commissioned, and Narnolia cracker is going to be moving towards feedstock gas, that is shale gas. That will happen sometime towards the end of the year. So these will all add to the margins. And internally, I believe that Reliance is trying to benchmark itself to be amongst the first top quartile of cost structure in the industry. So all these things are structural changes happening in Reliance, which will sustain the future growth of Reliance.
Okay, so that's the view that's coming in on Reliance. All 3 of our guests are rather positive on the trends for Reliance going ahead. The next actually is a sector, and that's the FMCG sector. Most of the counters in this sector are either trading near highs or are pretty much at lifetime highs. So what's the view? Which is the best pick to pick in the FMCG sector? Sharmila, if you had to pick a stock in the FMCG sector, which one would that be and why?
Well, I'd go with Dabur.
Okay.
And yes, I think that what we're seeing in the FMCG is sort of, Nestle, etc., all going to new highs. And I think the reason why I like Dabur is that, some time back you had all this concern with Patanjali entering the market, that there could be significant competition for Dabur. But, in fact, I think that when a player like that comes into the market, you actually expand, that market which caters, the kind of products that Patanjali caters to. And Dabur already had a portfolio within that space. So in fact, you've seen the kind of numbers they did for honey, etc. in this last quarter. So yes, I think, the management also sounded out that perhaps you couldn't get the kind of volume growth that you saw in this quarter. But I think that things are now back on track for Dabur as a company. And there is a little bit of a valuation gap between Dabur and some of the other larger FMCG players. So that could also close. close, because this stock hasn't really moved for the longest time. So this is a stock that I would like at this level.
Okay, Dabur is a stock that Sharmila likes. Jay, which one in the FMCG space do you like?
I'm positive on ITC.
Okay.
ITC, people have been talking of it transforming into FMCG company since last few years, but people have been disappointed because FMCG has really not become profitable. But you see that it has almost 7 brands which are over 1,000 crore plus brands. And FMCG forms almost 20-21% of the sales, though profits are quite low still as of now. And cigarette business is also actually an FMCG, though it's a sin business. So I feel that FMCG moving with more and more consumer products coming in, ITC would be a good FMCG bet if you take a medium-term view.
Okay, so ITC, I'll speak to you on ITC on a while, but Vineeta, on the FMCG side, what do you like?
See, FMCG overall we are positive, though most of all the stocks have run up a lot, so it doesn't give much cushion on the valuation. Still, we are one stock that we can push right now is Marico.
Okay.
Marico, because it has lately we had seen the top contributor to Marico sales, Saffola, or the edible oil segment, going into a little downtrend because it was more into a premium market. So this has revived this quarter. It has come up with Saffola has given a 9% volume growth, which is very good. Secondly, all the other segments, say the value-added hair oil, that also reported a 15% volume growth. Other segments which contribute a little lesser, say men fairness, that is again management is expecting 20% volume growth going forward for next some good amount of years. So the India business, that has recovered a lot. Coming to the international business, which contributes around 25% to the total sales. If you see the Southeast Asia region, that management is expecting it to recover now. And even the MENA as well as the Bangladesh, which contributes 44% of the total international business, that is doing well. So overall, one volume growth which was a little hangover on the Marico is now, I suppose, getting over. Secondly, the copra prices have corrected a lot in these over the from February. I would say it has corrected. So I suppose the overall the copra prices would aid to the EBITDA margin, which has been a little bit on the overhang.
Okay, so Marico, ITC as well as Dabur are the stocks that's been spoken about currently. Sharmila, Dabur had a good volume growth this time around, and as the case with all FMCG companies, it came on a low base. Will the base it will be reset now? Will they be able to go ahead with similar volume growth going ahead?
Yes, I think that definitely is a concern, because they did, even when the management spoke this quarter, and when they said that yes, the last quarter was hit by GST, etc., and which is why you're seeing a recovery in volumes in this current quarter. And of course, I think that double-digit 21% kind of volume growth is very difficult to sort of sustain going ahead. But I think the indications are that they'll be sort of in the higher double-digit range, if not crossing 20, but in the higher double-digit range, which I think is pretty good, for a company like Dabur, and with the kind of product portfolio that it has. So I think the reason why I like Dabur is the fact that not so much. Of course I'm concerned, and of course I know and I realize that you are not going to get that kind of a volume growth in the quarters going ahead, but their overall portfolio, the kind of products that they have, the pan-India presence that they have, that the rural bit is growing well. And yes, I'm a very happy investor in ITC and Marico, so obviously those are stocks that I like, and this is a space that I like. But I think within that space, probably Dabur hasn't moved for the longest time, so I think in that sense the time has come, because it's the kind of portfolio that it has is now beginning to get them results.
Okay.
So yes, I mean that's the reason I like Dabur.
Okay, that's the view that's coming in on Dabur. We need to move on to the next stock, and that is MGL. MGL has corrected significantly post the block deal that we saw yesterday, where BG Asia sold. They already have another 10% stake that probably they will need to sell, but there is a mandate that can be sold in post only July 2019. So that's the view that's coming in. What should one do with MGL going ahead? We'll ask our guest. So Vineeta, I'll start with you. Stock has corrected significantly at this level. Would it be a good buy for someone who's looking to buy?
See, MGL, we are long-term positive on the company, and we have a price target of 1,000 plus for the company. we expect the overall the green theme that is going on, the environmental thing that is going on, and as well as the PNG, it is still untapped in the overall domestic market. If you see, the company is expecting some 10% volume growth going forward for all the geographic areas that it is adding on. So it had bid PNG, BRB for some 3 more states. It's got clearance. So these 1 BG selling stake is definitely an overhang on the company, but I think it's an opportunity for any long-term investor to get into MGL at this point of time.
Okay, so it's an opportunity to get in. Jay, what should one do at MGL? It's corrected significantly. Is this the right opportunity for someone who's taking a slightly longer-term view to get into MGL?
Yeah, MGL is primarily into gas distribution, which is sort of a monopoly business, and we feel that the overhang of sales of BG is largely over with the last block to come next year. So that is what is pushing the prices down. So we expect that these are good levels with increasing earnings and falling prices. You have a very good value proposition. So at these levels, we feel if a person has a medium-term view, he can accumulate. And one major point which I found was Royal Dutch Shell they got MGL through acquisition of British Gas, and that company is focused. Royal Dutch Shell is focused on safety and handling city gas distribution with C3, C4 hydrocarbons is a risky proposition. Probably that could be a reason why Royal Dutch Shell is selling the stake. So once that is through, I think stock should have a reasonably good run.
Okay, that's about it. So the second, 2 of our guests do believe that it's a good proposition to buy, and Sharmila, would it be 3 on 3 or would you stay away from MGL?
No, it's a 3 on 3 because I think I completely agree that gas is the story really to stick with going ahead, and I do like even an IGL at this price. But I think if you look at the valuations, certainly MGL at this at the current price and valuation looks very attractive, and it's only this overhang that we've had that this this sale is going to happen, and it has finally happened. And when that typically happens, the larger investors are sort of out of the game, and then the stock price has to consolidate. But precisely, I agree with Vineeta that this gives you an opportunity to enter into the stock at a decent level. So yes, I think absolutely that if you're a longer term investor, this is a stock that you can look at this level, and with this opening up of gas licenses and this bidding process going on, I'm sure they'll also a lot of other companies will also gain, and MGL will be among them.
Okay, so it's 3 on 3. All three, I guess, believe that it's a good value proposition to buy for the slightly longer term. Vineeta, do you all have official coverage? And if you do, what's the target that you all have given, and how have you valued it?
We have a target of 1026, and the valuation is around 18 times FY20 expected EPS.
Okay.
So that's the target. Actually, if you compare it with the biggie, the IGL, it's trading at a low premium. The margins are also definitely lower, but I expect the margin which MGL has not been able to maintain. I certainly believe that going forward, it has a lot of room for margin expansion. Realizations, the company can easily take the realizations going forward ahead, and because of the rise in natural gas prices, and it has taken some corrective action in the past 2 quarters. It has taken corrective actions, and that should benefit the company. Volume growth coming in, margins expected to stabilize going forward. It should be a good bet.
Okay, Jay, you said that about the safety, and it's a trigger that once Royal Dutch Shell exits, there could be a trigger. But on the business front, what's the trigger that you're looking at if someone needs to value MGL on their core business?
The core business is primarily 80% into CNG for auto, and 10% for industry, and 10% for domestic. Penetration in Bombay is almost 26%. With the constraint is basically land, getting to lay the pipes. But once a customer is hooked onto the network, he's a permanent customer. So we have over 1 million customers in Mumbai already, and expanding to Thane and Raigad area. So this is one area where I feel that it's an annuity business for the company. At the same time, margins depend more on rupee value against the dollar and the international gas prices, because MGL does not have long-term arrangements. They go more on spot purchases. So, but they are able to pass through. There is no issue on that. So I feel MGL will be able to improve margins and protect margins also. They are trying to enter into city gas distribution in South. They have bid for some circles in Tamil Nadu, Andhra and Telangana. The results are yet to be announced. So if they bag a few rights, they can expand business into those areas also. And this is a company where, because of sales by BG over last 1 year, we found that the stock has come down from about 1100, 1200 to almost 800, and it has to correct. So once the last round is over next year, I think stock has a reasonable way to go forward.
Okay. Sharmila, on the core business, what do you make of MGL? Apart from all the news that have come out and it's corrected because of that, are you bullish on the core business of the company?
Actually, it's more the city gas distribution business that I think is the attractive piece, because I think that going ahead, that is where you could actually see growth for a lot of the gas companies and the demand coming in, and there I think we are very, very underserviced at this point in time, and there are many more vehicles and the kind of auto sales that you have, and with so many people shifting to gas, I think this could be a good business to really expand. And we did see that when the number of bids that we got when that process opened up. So yes, I think at this valuation, the basic business that they do, as well as the expansion in this city gas, is what I like. Okay,
so I think another 3 on 3 as far as Mahanagar Gas is concerned, and the last stock that we want to discuss is, since that mid caps have started contributing. We're asking our guest which are the mid caps that they like, probably that our viewers can study for at least or take positions for the longer term perspective. So Jay, I'll start with you. A mid cap stock that you like at this point of time and seems attractive to you.
We are very positive on IDFC Bank.
Okay.
Though it's not really a mid cap, but it's been beaten down to almost a mid cap. And people have been investing in this company for last 3 years, and everyone is disappointed.
Okay.
But so to say that the company is on the cusp of the transformation. This company had legacy high-cost loans, which are going to taper out, and it wanted a nimble and faster management. So you are having a capital first coming in, merging with this company. So the change in management which usually happen post-merger will transform the bank. And we feel that it has a way whereby the cost of funds will keep reducing by raising the CASA over a period of time. And yields will improve because the retail book has been increasing, and capital first brings in a lot of NBFC lending. So we feel that NIMs will improve, stabilize and improve. Stress assets are quite low, and valuation wise it's a very attractive proposition, trading at almost just about 1 time of the book.
Okay, so you're saying that the merger with Capital First is not priced into the stock price at this point of time. There could be multiple triggers for that going ahead.
I feel that it was priced in when it was announced, but then subsequently after the fall in price, it gives a good value proposition. So once the merger is through, we expect that the value proposition will be much better.
Okay, Vineeta, what about you? Which stock do you all like in the mid cap end of the market?
In the mid cap, have a very niche player, which is SIS. Okay. And SIS right now, it goes with a theme, like within our research, we are having a theme of professionalization of Indian businesses. Sure. And in this theme, this company is one which is the best suited right now. The company is the largest in Australia. With one acquisition, it is the largest security services in Australia. In India, is the second largest security services. For facility management, is the 4th largest right now. And the cash logistics, it's relatively small, but there are very few players in this segment. So overall, the business segment is very niche. The company has done past from 2008. If you see, it has been acquiring companies, and that has paid off. So very prudent acquisitions, I would say. Even in Australia, when it acquired Shub, some company called Shub or something, so it acquired, and it became, that was the largest security services then. So it acquired. Now 20% market share of Australia is held by SIS. In India, there is 3.5% market share only for SIS, and the management is expecting that it should be from 2nd and the 4th position, it should be the largest position in the market from FY20. And this the management is expecting because it has 3 acquisitions which are lined up going forward, which are into advanced talks right now with the con call and stuff that we had with the management. We are positive that that should happen sometime near, and that will give a very good base to the top line and the bottom line of the company. Only thing in the current quarter, the price corrected a little bit, and it gave an opportunity, I would say, in the sense that some of the businesses, some of the provisions that the company had to take, because it is into servicing those sectors which are in some companies are already into NCLT.
Okay.
So it has made some provisions on the receivable side, and that's the reason the profit is still a tad lower. However, still 30%, 40% top line growth, 30% PAT growth still gives a good cushion. So I would say it's a niche segment getting around 1100. 1500 is our target price. We're valuing around 32 times P.
Okay, so the substantial upsides yet left for SIS going ahead. And finally, Sharmila, in the mid-cap end, what do you like?
So I'm also going with a sort of a niche company, not as niche as SIS, but quite niche. This is a company called Mayur Uniquoters. I've been sort of buying this for clients for the past year and a half. So your numbers weren't particularly good this quarter. I mean, the reason why I'm highlighting the stock at this point in time is that while the numbers were sort of flattish, I think the story going ahead is great. They basically make whatever PU or PVC leather, which is used in seating for auto companies and autos and footwear. And footwear has been little slow, and because of GST concerns, etc. So that part of the business has been slow. But the auto part of the business is picking up very nicely, and there is good traction in that segment, both domestic business as well as export. And I think what could be really interesting and exciting for the company going ahead is the fact that both Mercedes and BMW are slated to do their factory inspection sometime in Q3 FY19, which will would mean that going forward there could be increased orders from there, and there is I mean once you're on that list, then sort of things look very different from the order size and that the league that you're in sort of perspective. And there is a sort of growing trend to shift to this kind of seating requirement, even in as far as domestic OEMs etc. is concerned. So I think with the kind of vendor that they have, network that they have, and all these possibilities coming up, this is a very interesting stock in the mid-cap space.
Okay, so Mayur Uniquoters, SIS as well as IDFC Bank are the stocks that has been spoken about. You wanted to add something?
Yeah, on IDFC, some interesting statistics. We did a line-by-line consolidation of IDFC Bank and C Capital First, and we come up with some very interesting numbers.
Okay.
Projected for end of the FY19, we come to a NIM of over 3%. Earnings of 40 rupees and a book value of 500, which are very interesting numbers to look at.
Okay, so we'll watch out for IDFC Bank. Let's wait out for the official, it's officially happened, but the official date of the merger that comes in. But with that, it's wrap on today's Hot Money. Sharmila, thank you so much for coming in. Jay, as well as Vineeta, thank you so much for coming in. Ask BQ comes up next. Stay tuned to BloombergQuint.